The U.S. Federal Reserve cut its key interest rate by 0.25% as widely expected. However, the central bank, citing labor market concerns, has penciled in 2 more cuts this year from just 1 which was predicted earlier.
In support of our goals and in light of the shift in the balance of risks, today the Federal Open Market Committee decided to lower our policy interest rate by 0.25 percentage point. We also decided to continue to reduce our securities holdings.
The Fed's decision to resume its rate cut cycle after a long pause since December last year comes amid weak jobs numbers. Policymakers justified Wednesday's tone change to growing signs of weakness in the job market. In a post-meeting statement, officials said the unemployment rate had edged up but remains low, adding that downside risks to employment have risen. However, highlighting the dilemma for the Fed, policymakers acknowledged that inflation has moved up and remains somewhat elevated. The Federal Open Market Committee has voted 11-1 to cut the federal funds rate. Only one official, the newly sworn-in Stephen Mirren, voted against the decision. Now, Trump's pick, Mirren, has favored a larger 0.5% cut. Despite a legal battle with President Trump, Fed Governor Lisa Cook also voted for a 0.25% cut. An appeals court has ruled against Trump's firing of Cook ahead of the week's Fed meeting. Now, the decision comes at an extraordinary moment for the Fed. Trump has demanded drastic rate cuts and sought to expect more control over the central bank. But as recently as July, Fed boss Jerome Powell was talking about a solid labor market. Powell and the central bank have clearly been blindsided by the soft jobs data after the recent divisions. Now, Wednesday's press conference was drenched with references to weaker hiring and the economic threat.
We say we're not on a preset path, and we really mean that. The actual decisions we make are going to be based on the incoming data, the evolving outlook, and the balance of risks at the time the decisions are actually made. So you will have seen that we have 10 participants out of 19 who wrote down 2 or more cuts for the remainder of the year, and 9 who wrote down fewer than, in fact, in a good number of cases, no more cuts.
And for more on this, our correspondent Susan Tehrani has sent us this report from New York. Take a look.
The Federal Reserve cut interest rates by 1/4 point, the first cut in nearly a year. The move comes as job growth slows and unemployment ticks higher, with the Fed signaling 2 more cuts could follow if the economy continues to cool. For Americans, the impact is mixed. Borrowing costs on mortgages, auto loans, and credit cards should gradually ease, giving households some relief. But lower rates also mean savings accounts and credit cards will yield less. Stock markets welcome the move, betting cheaper credit will support growth, while the Fed insists its priority is keeping inflation under control without tipping the economy into a recession. Susan Tehrani reporting from New York for WION World is One.